Thanks for coming on, man.
Dude, thanks for having me.
Yeah. Let's start with, and I know who you are, but let's start with who you are, where you're from, just to give a little bit of context.
Yeah, so my name is Brian Ennis. I'm from Insurance One Agency. It's an independent insurance agency, which is an affiliate of the Real Estate One company.
Yeah.
I've been in insurance for all variations of insurance for well over 15 years. P&C side, home, auto, life insurance for the last 7. But I also did F&I for the automotive industry. I worked for I was representing the field force for Chrysler. So when you go buy a car, right, and you get your manufacturer's warranty, and then you can buy the extended service plan or your service contract, as they say it. So I was the rep for that as well. So
you've had a lot of experience.
Lots of stuff. I wore lots of hats in my day.
Let's kind of not talk about the hats, but all the hats led you to this hat today.
Yeah.
For better or worse?
Better.
Okay.
Definitely. Insurance it's something everyone needs.
I was actually going to start it off with insurance. Can't live with it, can't live without it.
Yeah. But from my point of view, it's such a neat experience to be able to, assess someone's household and, kind of uncover some of their needs, some of their desires in life, whether it be a life insurance, phone call, but more so just making sure that everything I'm able to provide protects them, their family, more importantly, their assets in case something happens. God forbid
Speaking of, people miss coverages. So to your point, you trying to figure those things out and look behind the curtain and going, whoa, guys, we got to talk about that. How often does that happen?
More so than you would think. Sadly, there's a lot of insurance producers out there that are more so focused on just getting a commission sale rather than helping out their clients. So. And the sad reality is insurance is a numbers game, right? Because contractually, if I own an insurance company and you've been insured at my insurance company for 45 years, but then somebody else comes in and they've been insured at my insurance company for 2 days. Contractually, I have to treat that person exactly the same as I would treat you for being loyal for 40 plus years. So with that said, it's a price-driven game, sadly. So the cheapest insurance policy isn't always the best one. And a lot of times you'll see coverages missed, like you said, because a lot of people are either underinsured or there's endorsements on the policy that they're missing. So sadly, not everything is covered under a one base insurance policy. There's a lot of add-ons that, like you said, if they're not added on, then people are missing those coverages.
Yeah, and that's crazy to think about too. And it comes back to trust, kind of trust. Who are you putting your trust in with insurance? You're putting trust into somebody. Yeah. Whether it's the right person or the wrong person that's giving you the best. And to back to your point about a price-driven commodity at the end of the day. Yeah. What makes you stand out? Service and opportunity. And if you're not actually going above and beyond, like I did medical device sales, so I sold plates and screws, shoulders, tips of your fingers. And when I was getting into the game, it was all transitioning to a commodity. And rule of thumb is just a fist if you ever want to move it. You can move all these things around. Price driven. So, all these bigger companies are able to slash their prices on implants because they're making money somewhere else in their companies. So, and people were selling, we call them total constructs. So if you're doing a distal radius and we're talking plates, screws, drill bits, disposables, that's probably $3,000 per case. And these guys are coming in and undercutting us to $800. And then they'll come back to us and say, well, we need your total constructs for $500. Dude, no one's making any money.
No.
And I understand when you have zero ability to sell your service or innovation, how do you sell? Based on price. But who loses? Everybody. Yeah. Everybody loses. The industry loses. Yeah. And that's the one thing that kind of gets me so frustrated on commodities or being in a commodity sale. I'll sell it all day. I'm in a commodity. But it's, again, pushing that service, pushing that relationship, and getting those people to realize that we're all not created equal. One thing that we realized when we changed coverages, and that we went to Hans Financial Group, and they rep Hanover, or Hanover is an affiliate. We get a crazy discount. And we were able to like double our coverages and slash our premiums. That's kind of a unicorn situation, but it really opened up my wife's eyes to coverages.
Yeah.
So what's the most overlooked thing? And I'm sure we don't have enough time to like pinpoint what people are overlooking, but if somebody can take away something today, what's the one thing that a lot of coverages are missed on? Is it home? Is it jewelry? Is it personal property? Is it cars?
Great question. It would most likely be either service line coverage or sewer and drain backup.
Okay.
Or water backup, or they also call it sump pump overflow. The reason being is with most carriers, it is an endorsement, which is like an add-on coverage. So I literally go in and check the box, and it adds that coverage to the cart, let's say. And if it's missing from the policy and they have that type of loss, it's not covered. And so let me back up and explain those coverages, because they can sometimes be, right over the head.
Yeah.
So service line. So let's say you just have, I'll use city sewage and city water, for example, right? The city sewage and water lines run usually on either the back side of the property, or they're running, underneath the sidewalk in the front yard. So the city is responsible, obviously, for those main lines, but as a homeowner, you are responsible for the hookup to the city all the way to your house. So most commonly in the backyard. So if something, let's say you have one of those 100-year-old oak trees in the house, or in the back of the house, and those roots are very invasive, and they go inside the service lines. They grow in the coupling mark, where the pipes fit together, and they couple. Roots get in there, they destroy the lines in the backyard, the toilets are backing up, and you have someone come out and assess it and find out that you have to replace the whole service line. If it's on the policy as an endorsement, meaning I did my job and I checked the box, then it's covered. If not, then you as a homeowner would be responsible for mitigating that loss on your own. And it is expensive.
Very expensive.
Oh, upwards of, I would say 10 grand easy all day. Not to mention you're going to have excavation costs. All your landscaping is going to get ruined. So that, if the endorsement's on there, depending on the carrier, they're going to reimburse you for landscaping. So if you have to rip up a bunch of trees and bushes and flower beds and everything, you can usually get money to fix that once the service lines are replaced. But yeah, that's a huge one that's overlooked, and especially at least around the Detroit metro area, where a lot of houses are kind of hitting that 60, 70, 80, sometimes 100-year-old marker. You better guarantee that you have that endorsement on your policy, because it's not a matter of if, it's just a matter of when. Yeah,
I think a lot of people overlook some of those service lines, and I'll kind of elaborate on it as well. Not just city water, city sewer, but well and septic. And it's like out of sight, out of mind. Well, I can't see it, I'm not too worried about it. But those are going to be the biggest things that are going to be a cost to you. And actually, I just did a water main. My water main, because it was directional boring. So someone, do you know what directional boring is? They just put a pipe in the ground, and then they can steer it. They can push it and steer it.
Get out of here.
So there's no major excavation, but you can really only do that for for water lines. So they'll push this pipe. It's really how whenever you see those machines that have all the pipes on them, and someone keeps pushing them down, that's directional boring. And $5,500 just for a directional boring. I mean, obviously the cost is in the labor and them buying that thing, and them having the experience to be able to deal with it versus the excavation. Granted, the excavation was going to be more expensive too.
Oh yeah.
And I recently got a quote. This was for a buyer in Livonia or Madison Heights, somewhere over that way, Oakland County for sure. Whole sewer main. I think it was like 17 grand. Oh, there were a few options. So 17 grand was the total sewer line. Yeah. A portion up to the road, because from the road to the main looked to be in good condition. There was a few bellies in the yard, kind of a good thing. That was, so a partial replacement was $12,000, and then they call it lining. So they line the old clay tiles or concrete tiles with an epoxy product, then it hardens. So it really basically turns it into a PVC pipe. That was $9,000, but a total replacement, if that's kind of like the hands that you were dealt, it can be very, very pricey. And again, it's very, very overlooked.
Oh, totally.
Does that completely change your premiums though? Like, how does that affect your premium? Obviously, your premiums are going up for that policy, but are we talking about doubling? Are we talking about?
Great question. No. And it really depends on the carrier. And you'll probably hear me say that a lot, because a lot of all insurance companies do everything differently. Some of them they'll do like a, bronze, silver, gold tier, and then they'll just include it in the silver tier. Or if it's included in silver at $5,000, the gold tier will get 10, and they kind of do it that way. And other carriers do it with just like I said, just check the box and an add-on. Service line coverage for Frankenmuth Insurance Company. They only charge like $25 a year to add it on there. So, $25 a year is nothing. That's nothing at all. Yeah, exactly. Yeah. So, but other carriers, if you, like I said, if you go to that next tier up, it might be included. It's included for sure, but it might be $100 more a year. Yeah. But you're not just getting that; you're getting this, and this.
To your original point, though, too, you get what you pay for to a certain extent. So like the cheapest is never the best. Actually, I was going to say not always the best. The cheapest is never the best.
It's never
the best.
Yeah.
So for us, I definitely want to be on a good, better, best scale, or a bronze, silver, gold. I'm probably always choosing more of a silver option.
Yeah.
But the cheapest is not always the best. And if it's too good to be true, it might be too good to be true. But to the point of, this is how I kind of throw your name out there, or even John Millard's name out there, is these are our preferred guys. They're going to look over what you're currently getting, and they're either going to get you a better deal or confirm that you have a great deal.
Yeah.
And just use them as a resource.
Yeah.
Speaking of, did you get a phone call from anyone recently? Miller's?
I did not know.
No. I gave him your number, and she said that she was going to call you. I wonder if they even wrapped it up. Never mind. But back to that point of, it's, hey, use them as a resource and see if you're confirming for a better deal. Because I'm assuming that's probably what you would do as well. Is like, wow, no, you got a good deal. You're getting covered. You're protected. I can't beat that price.
Every time. I'm very transparent with every policy I review, and like I said, I like helping people. I'm fortunate enough to be employed through Real Estate One, where not everything in my life is dependent on a sales. We are more customer service focused with our problem solving. So there's been so many times I can't even tell you where I'm like, send me your other quotes. Let's look at them together. We'll compare, review them. And there's been many times where I'm like, you need to go with the competitor, because it's a better policy than what I can offer you.
Yeah.
And
that's and that's kind of like, we're very fortunate as well to be busy at this point in time.
Yeah.
And I feel like the 90% of our job is just an educating these individuals so they understand and they're confident and comfortable with any decision they make. No different than what you're doing.
Right.
No different than what John's doing.
Right.
It's getting these individuals to truly understand what they're doing. Because I think that within the real estate industry, with all of our aspects, everyone just grabs someone's hand and runs them through the process. And at the end of it, they're like, what the hell did I just say yes to?
Oh, yeah.
And I think that's a huge problem. Well, that's a problem for a return phone call or lack thereof.
Yeah.
I want that phone to ring in the next 5, 10, 15 years and referrals. That's not going to happen if they don't feel like they've been educated.
For sure.
And that's kind of like scary to think. And too, like, not that I have any names on the top of my head, but, you know, when I've had other conversations with lenders or insurance or a real estate agent, it's like, pick one.
Yeah.
And I never want to be pressured into those things. I want to understand what I'm saying yes to. And if that's a first-time homebuyer's experience, no wonder why they have bad experiences with insurance agents, lenders, or real estate agents. And a lot of our time is not therapy, but it's kind of like getting them to know that there are going to be better experiences out there with real estate agents, insurance providers, and lenders.
Yeah.
I wanted to go back to something. You rep a few companies.
Yeah.
How many?
At most up to 17.
Okay. Wow. I thought you were going to say like 5 or 6. 17.
Most folks fit within 5 or 6.
Variable. You know?
Yeah.
Okay.
But when I say up to 17, it's because we have a lot of other options. If it's a high risk option, we can send it to a specific brokerage that has other carriers in that high risk field, but most folks fit into, I would say maybe 6 to 7 of our carriers that we have.
And I'm sure, you know, a lot of your carriers are very similar. Okay, so out of you have 17 or roughly.
Yeah.
How many insurance companies are in the country? We talking hundreds?
Oh,
thousands?
Maybe somewhere close to thousands.
Okay.
I would hazard a guess. Yeah.
So, and this is one point I wanted to bring up as well is this goes hand in hand in the conversation of policies, coverages, making sure you're protected on certain things and the additional add-ons, the sewer mains and the city mains. All insurance companies are not created equal.
No.
Correct?
Absolutely not.
Yeah.
Yeah. And it really goes into, like I said, you know, the risk pool that they choose to operate in. You know, the insurance companies have actuaries who have enormous brains.
What's an actuary?
They're basically the number crunchers to assess risk, essentially, and then assign a dollar amount to how much they're going to charge for those individuals that fit inside each risk pool.
Is that a technology or is that an actual human?
Human.
Okay, wow.
Human using technology.
Yeah.
Is probably the best answer.
Yeah.
But and they review it and they assess. So a lot of times people will say, you know, like, hey, I'm moving from Southfield, Michigan to Brighton, let's say. And I hate to put Southfield on the chopping block, but it's closer to Detroit. There are traditionally more people in that area. It's a higher populated area. Sadly, there's more crime,
more people.
You said it. I didn't. But
well, I lived in Chicago, and I saw where my insurance was to where my insurance is.
Yeah. Oh, yeah. So, so the actuaries take that into account, and it might be all right. They look at the claims reports and be like, okay, there are significantly more claims based on collision accidents or theft accidents or vandalism in this zip code, so they charge higher premiums for that zip code.
Yeah. Let's give some silver lining though on that, because I think that's an overlooked point of, and let me take a step back. We moved from Livingston County just to Oakland County, just to New Hudson.
Yeah.
So like 5 minutes away, but we just crossed the border, and our insurance in some capacity did go up on all policies. And we did do a short-term renter policy, but renter policy, that's mute. But our auto did go up. And it's purely because we're in those zip codes now. So in the silver lining is obviously there's data, and these are individuals that are just looking at data and processing data and processing risk. And they're ultimately the last front of that company when it comes to risk tolerance. So the premiums have gone up, but it's also protecting you as a consumer. So that's only the silver lining that I can give you.
No, it's true though. You're absolutely right. And a lot of times people overlook the fact that your insurance policy protects more than your physical asset. It protects you and your bank accounts, right? Your 401ks, your investments. There's a section called liability coverage. It's on both your auto policy and your homeowner's policy. And then furthermore, if you had an umbrella, which, picture an umbrella on a piece of paper and you draw your home and your auto's underneath that umbrella, that's additional liability coverage.
Protecting the gaps that you may or may not have in between those things, and just an overall policy. Like, let's say you're in a car accident and it only covers up to X, but you need it to get to Y. An umbrella policy might be able to cover that difference.
Yeah,
and sometimes
exactly. Yeah, it's just an extension. But here's my example I use with the auto. Let's say you're driving your car, I'm driving mine, and you roll through a red light and just smoke me in the intersection, T-bone me, and I break both of my arms in that accident. Lo and behold, there's probably better examples, but I'm a surgeon, right? With 2 broken arms, I'm not performing surgery, right? I'm out of work. I'm not doing anything to make money, so I'm going to come after you. I'm going to sue you.
Yeah.
I'm going to sue you for lost wages. Yeah. I'm going to sue you for pain and suffering. I'm going to sue you for any medical bills that either my auto policy or my health insurance didn't cover. So right there, that check's gonna be a pretty big one, you know, especially if
especially the lost wages.
Yeah, exactly.
Yeah, probably the biggest check.
Yeah. So your auto policy has bodily injury liability built into it. The gold standard, I would say, is $250,000.
On my policy or your policy? You're the surgeon?
Your policy.
Okay.
Yeah, everyone's policy.
Yep.
But it's going to come off of yours. But I'd say the gold standard for auto insurance is $250,000 per person, $500,000 per accident. So let's say the lawsuit ends and you owe me $300,000. The insurance company is only going to pay up to $250,000 out of all said and done, and you're going to be on the hook for the extra $50K. That's just a small example of it, because chances are it could even be higher than that. But that's where the umbrella policy would kick in. Yeah. You'd have an additional either $1 million or whatever increment you decide to purchase the umbrella for. But a lot of folks overlook that. They think, all right, I got car insurance, I'm just protecting my car. Well, no, you're not just protecting your car. Liability is probably the most important part of your policy. And it goes even further with your homeowners. You don't think about, if you have an Amazon package delivered and the guy slips on the ice and breaks his back or whatever. Yeah. You as a homeowner are on the hook for that liability. The biggest one I think is overlooked. Let's say you have a party, have some friends over and everyone's drinking, having a good time. You let one of your friends leave the house after a few cocktails and they get in an accident. The person can sue off the property. Let's say you left my house and you got in an accident. The person who you hit can sue me as a homeowner because I didn't offer you a place to stay, or I didn't take your keys from you. I let you drive home. So there's a lot more that your insurance policy will protect you for, rather than just the things that we really think about.
For me, it goes back to can't live with them, can't live without them.
Yeah.
And realizing how you're protected, looking at the silver linings, making sure we're fully covered on all capacities. And one thing I want to hit on briefly, because we could probably talk for days on coverages and policy to policy, company to company. What's the standard minimum coverages for auto? What do you think normally people are putting out there for policies? Does that question make sense?
Yeah.
Is it 250?
250, 500.
That's average?
That is set by the state of Michigan.
Okay.
But yes, that's average. It's average because it used to be 100,000, 300,000, and then we did an insurance reform back in 2020, I believe. And the state decided, all right, we need to bump that up to 250, 500 because when the reform took place, the law changed where we can now sue each other to recoup the cost of medical bills. Before 2020, we couldn't do that. Any any medical was automatically paid out, by the policy.
Yep.
But now that we have the option to choose less, we call it PIP coverage, which stands for personal injury protection. We can choose lower and lower amounts. So the law also changed that allows us to sue for medical.
So does that make Michigan, and this is not applicable for a lot of other people in the country, but is Michigan still at this point in time a no fault?
That's correct.
Okay, but we've gotten the ability to go after and sue for damages.
For
auto.
Yes.
Okay.
Yeah.
The only reason I bring up coverages is because when I think I was in Chicago, I was still like DC. I had like the 100 to 300,000, and then the second I moved somewhere, and I was doing a route, or I probably shouldn't even say their name. I was doing a cloud-based insurance provider, and it was cheap, it was easy, it was all good. Knock on wood, I never had to make a claim on it. Back to all insurance companies are not created equal.
Yeah.
I moved to Chicago, and I got rep by an independent provider, and they looked at my policies. They were like, dude, you're so lucky that you never had like any problems, because I think that you would have been screwed.
Yeah.
And we bumped our minimums because the difference of cost month to month, year to year was arbitrary.
So you'd be shocked sometimes. Yeah.
But to make sure that you have the peace of mind for coverage could mean the world.
Oh, absolutely.
Could mean the absolute world.
Absolutely.
You get into really a bad situation at times, and I'm like the least biggest fan of talking about speculation. But unfortunately, you got to speculate sometimes.
Yep.
And you got to be prepared for the worst case scenarios. And that's exactly the conversation that was had in Chicago, was like, dude, like, we got to think big picture. Like, what if those things happen and all you have is $100,000? $100,000 adds up pretty damn fast.
Oh, yeah. Especially you go
adds up fast.
You go to the hospital and they charge $40 for an aspirin. You know,
like time, surgeons. I mean, everyone's got to get paid.
Crazy.
And I did med device sales for years, like I said, and the times were, and not that I ever saw the bills, but when you start to like add up the cost of just your thing, your little plates and screws. Yeah. But then every single person in the room, we got to keep the lights on. Those things add up fast. In a non-emergency situation, you put life and death on the line, the prices are completely different.
Oh yeah, for sure. Yeah. And especially, first-time home buyers, and it's such a hard thing to grasp too, because you've saved. You put all of your money into your new house, right? You got it finally enough to get a decent down payment, and you're broke, right? When I bought my first house, we were broke after, right?
Yeah. The American dream.
Yeah, we saved enough to still enjoy life. But I mean, man, when you look at your bank account after you put that huge down payment down, you're like, oh man. But where I'm going is, when you become a home buyer, you have so much more to lose at that point in your life, because your assets are now all tied up in your new home, your new home, and there's just a lot more to think about.
Yeah, and that's maybe why I evolve. We're all gonna evolve to a place where you kind of need this conversation.
Yeah.
But I went from being single, broke, living in an apartment with 3 other dudes to actually now having assets.
Yeah.
So like that's the bigger, and we have a bunch of policies. We have a bunch of we have a bunch of duplexes, so every single one has a policy.
Yep.
We've got, the whole life policies, and then we have an umbrella. So, making sure that you're covered, and that's a part of that conversation that you guys consistently have is worst case scenarios, planning for the future. And that's often a thing that is just completely overlooked by these individuals. Yeah. The one thing that I always my financial guy said it, because we try to do everything. But he goes, no, man, you're the CEO of your life. You just got to find a CFO. And you got to have a CIO, like a chief insurance officer. These people that are all on the team with the same direction in mind. I want to go back to something, because it's on my list right here.
Yeah.
And you brought up first-time home buyers, and we're going to touch on it. I got to start these cameras back up, but just run with it. What are the top things a first-time home buyer should be aware of when it comes to quoting out insurance? They're getting a quote, they're having this conversation. What do you think are the top 3, top 5 things that a first-time home buyer has to be aware of?
Yeah, that's a great question. I would say the 3 I could narrow it to 3, I guess. Yeah, no, I can narrow it. Well, I want to do a top 6, right?
Yeah.
But the top 3 things that they should be aware of is the dwelling amount, and if they have what they call replacement cost on the home.
We just had this conversation. We're buying a townhouse, and it's the difference of replacement cost versus whatever, but replacement cost.
Yes.
What it costs to rebuild that house.
Exactly. A lot of policies might not have replacement costs. So where that comes into play with a first-time home buyer, understanding essentially what replacement cost is and making sure you have it. If your house suffers the loss, right? Let's say you have a roof that's 15 years old. It's a 20-year warranted roof, right? It has a lifespan of 20 years. And 15 years old, it finally gets ripped off in a storm. If you don't have replacement cost on the policy, then you're going to get reimbursed for a 15-year-old roof. So it might be, let's just say it's a $20,000 roof. At 15 years old, it's only worth $5,000 at that point.
You're going to need a check for $5,000.
Yeah.
Yeah.
So making sure you have replacement cost on it. And a lot of carriers too they'll kick in up to, we call it like 125% of your dwelling coverage. So let's say your house is insured for, $200,000. They'll actually go 25% over $200,000 just to make sure that you are getting replacement costs, because there could be an increase in labor, an increase in materials, right? If there's a huge storm that comes through, tornado destroys, 400 houses.
Yeah.
That's 400 houses going after the same couple companies that replace, roofs and stuff. So one, they're probably going to jack their prices up a little bit because supply and demand, right? And if they do charge a little bit more premium at that point for a roof replacement, if you don't have replacement costs, you're going to be out.
It's like
quite a few bucks.
Maybe not directly correlated to gap coverage, but that's also, I think, a big thing that people, and I don't know if that is gap coverage, but like, auto. So I buy it for 40, it depreciates to 25 or 30, and I still owe $35,000 on it. If I have that replacement coverage, the insurance provider is going to give me what it's worth, that $25K, and then I'm out of pocket X amount of dollars.
Yeah.
I think that's another big thing that people are overlooking is gap coverage. So that's a great point.
Yeah.
Realizing what the replacement costs or what you're able to be provided. Is it the 100? Is it the 80%? Is it the 125?
Yeah.
So on and so forth. So that's number one.
That's probably the biggest one. Yeah. Make sure that your house is going to be, at least we call it indemnified, restoring you to the point before the loss.
Yeah.
But
yeah, you're whole again.
You want to get whole again.
Yeah.
The second one is probably I'm gonna teeter back and forth between liability coverage and endorsements. When I say endorsements, I'm really focusing on water backup and service line. We talked about service line before, but water backup is another big one. So if you have the sewer and drain backup, or you have a sump pump that fails and water backs up into the basement, or let's say you don't have a basement, you have a crawl space. It's in the crawl space, or I've heard scenarios where sewage backs up into the showers and overflows the toilets.
Yeah. Let's touch on sub pumps really quick though.
Yeah.
That matters.
Absolutely.
If you don't have a sub pump, sometimes that is like, so let's say I have a 1944 duplex. I've got 0 sub pumps. I have floor drains, but back in 1944 they didn't have sub pumps. They weren't using sub pumps. That's only like a recent thing of 1990.
Yeah.
If I don't have a sub pump, that matters.
Absolutely. So you want to have this coverage. Like I said, it's an endorsement that I put it on every single policy. Whether you got a basement, a crawl space, if you're on a slab, you're getting this coverage.
I'll give you the $25 a year, but you need this coverage.
You need it. Yeah. I mean, absolutely. It's because it's if you don't have it, it's not covered, and especially in Michigan. It's one. The reason it's an endorsement is because it's one of, if not number 2 or 1 most
biggest problems.
Place claim. Yeah.
Yeah.
It's the biggest one. So that's why they make it an endorsement to kind of, I don't know. I don't want to call it a loophole into them not having to pay out, but
well, it's sometimes if you don't ask, you don't receive.
Right. Exactly.
So, and if you're not gonna you're not gonna ask me for the policy, it's not there's a reason banks do what banks do. There's a reason why insurance companies do what insurance companies do. Risk tolerance and protecting themselves as much as possible, because at the end of the day, they are in the business to make money. They're not in the business to always pay out on policies.
Yeah.
I mean, I get that.
Yeah.
But as a consumer, protect you as much. It's got to be like a give and take sometimes.
Yes, yeah, you're right. Absolutely. Yeah. And, you know, like, I hate to, you know, put the thought in your head, but if you got sewage backing up into your, you know, into your shower, or, you know, back into your basement, it's not just your sewage.
And we're not talking about a small inconvenience. We're talking about a big inconvenience.
Oh, it's terrible. So making sure you have at least those 2 endorsements on the policy, or those 2 coverages, depending on, would probably be number 2. Because those are the most commonplace claims, and especially in Michigan, you know, at least around these areas, you got to have them. You absolutely have to have them. So I would say between replacement costs and those 2 additional coverage, make sure you have those. Check your deductible. We'll call that number 3. A lot of carriers.
What's a deductible?
Great question. So a deductible is your out-of-pocket amount if you have a loss. So let's say your deductible's $1,000. You have a claim, you have a loss in your house, and you get an assessment, and it ends up being a $6,000 repair bill. You are going to be responsible for $1,000 of it. Your deductible is $1,000, and then the insurance company is going to write you a check for $5,000. Yeah. So,
and it will affect, and not that this even matters, but I learned that this will inevitably affect. You are covered. That's the good news.
Yeah.
Your premiums might be affected.
Yes.
Yep.
Yeah.
And then let's do even a worse example. If you have a loss and it's at $500, you're just going to be out of pocket $500 because that's your deductible. Less than your deductible. Is that correct? Are you tracking on that?
If your deductible is $500?
No. So if your deductible is $1,000, you have a loss. It's less than your deductible.
Yes.
You're just going to be out of pocket.
Don't place a claim.
Don't place a claim. Okay.
That's the best advice. Don't place a claim.
Yep.
Yeah, because you're usually, when you place so we can get into this in a second, but yeah,
I didn't even think about that. And so
it's less than don't. Yeah.
Yeah. And I don't know if we have any like applicable examples. Let's say like we get a broken window from a lawnmower, and the window only costs $700 to replace.
Yeah.
And maybe even if your deductible is only $500, I probably wouldn't even replace a claim, because we're talking about $200 to go through this process to affect your premiums.
Yes.
You might feel whole in the moment, but you might not feel whole over 6 months to a year on that being a loss of claim, or a claim of loss.
Yeah.
And obviously that's a moving target. You know, what are we going to claim on? What are we not going to claim on? If our deductible's $1,000, you take it in stride. If it's $1,200, $1,500, what's the inevitable big picture of money out of your pocket when all things, premiums and deductibles? That's a great point. I didn't even thought about that.
And actually, I'll just, since we're there right now, you place homeowners claims are not the same as auto related claims. So if you place a claim on your homeowners policy, you are rated against that claim for 5 years. 5 years. And realistically, your rates will go up between 9 and 20% of your premium. Your premium will go up 9 and 20%
for 5 years,
in which you are rated against for 5 years. Yeah. And it is almost impossible to shop you out and switch your carriers during that 5 year period.
On homeowners specifically.
Correct.
Okay.
Yes. So going back to it, you really want to save your homeowners claims for something major. Big. Yeah. Assess it. Even if I always say, if you got $1,000 deductible and you find out that your claims may be, only going to be $4,000, so you might just want to eat it at that point and go out of pocket and just just pay for it out of pocket, because over the next 5 years, if your rates go up 20%, insurance companies are getting their money back.
Oh yeah,
they're getting
getting paid.
Yeah, they're going to find a way to get it back. So.
So you might feel whole today, but you're not going to be whole over the next 5 years.
Yep.
Auto, I have a claim. How long is that on my record for? Is that a 5-year thing as well?
Depending on the severity.
Okay.
3 to 5 years. So some of the major violations, like if you had a DUI or you were doing 20, 30 miles an hour over on
reckless
a speed.
driving.
Yep. That one's going to stick for 5 years.
Okay.
But if you, let's just say you had you hit a pothole, right, and it just destroyed your front wheel and front fender, that technically is considered an at-fault accident. And that one's going to probably stick on for 3 years.
Yeah.
No other cars were involved in the accident. It was just something that you couldn't avoid. Sadly, it is rated as an at-fault accident. I wish it wasn't, because Michigan roads are terrible, and it just is what it is. But, so depending on the severity, 3 years to 5 years.
I'll give you a funny example, though, too. When I was when I was in D.C., I got into a fender bender, and I rear-ended somebody basically at a stoplight.
Yeah.
Like he light turns green. He kind of I'm going to use the word floors it, but he definitely puts his foot on the gas. He kind of jets off, and I do the exact same thing because I'm probably like distracted or doing something. I look up, and it's not enough time. I slam on the brakes. I bump him a little bit. He gets out, I get out, and he kind of looks at me and looks at the damage, and get this, he had a hitch. So I just bumped in my bumper with a hole, and me and him both were like, he goes, "You good?" And I'm like, I'm good, man. Like, we're good. See you later. His wife gets out. I was like, we got to talk about this. And I'm like, what? Time out. All the damage done to my car.
Yeah, no, that's fine.
And we exchange information. We move on. And I get a phone call. Well, I get a text message from him with his wife and myself, says, "Hey, she's going to be the point of contact for this." And I said, "Whatever."
Okay.
She calls me up. She goes, "Hey, this happened. This happened to me last year." And I took pictures of their bumper. Their bumper was completely messed up. So you didn't do anything in the past year.
Yeah.
She goes, "This happened to me last year, and a girlfriend, same car, north side of DC, and we got paid. If you don't want to deal with insurance, we'll take $5,000. And I'm like, what? What the heck? I said, no, I guess I have to call my insurance company now. In hindsight, 2020, I guess just go through the process. I guess you got to call the cops. You got to document the stuff. Never admit fault. I hate to give that advice.
Yeah.
Allow your insurance company to have those conversations, period.
Yeah.
You're not an insurance provider. You're not a lawyer. You're nothing. Unless you are, then you could do this yourself. But allow these insurance companies to have the conversation.
Yes.
Ultimately, it cost me $500 deductible. Everyone's cars were fixed and replaced, and I don't know what ended up happening with medical pain and suffering and like healthcare stuff. But from what I've learned, there's definitely a process to that. They need to prove there's actual medical pain and suffering, and I doubt that happened. So I'm sure their bumpers were replaced, and we all moved on with our lives.
Yeah.
It affected my premiums for a long, long time.
Yeah.
And ultimately, I was with Geico at this point in time. Geico was awesome.
Really?
Geico was awesome.
That's good.
And every single time, and maybe it was just like all placebo, but every single time I had a conversation with them, I was like, I'm so excited to pay money at Geico because they just make you feel so good. And ultimately, I said, do I cut her a check, or am I just cutting Geico a check? Ultimately, I wrote a check to Geico for the next 3 years, 2 years of my life. And it came to a point where Geico said, we're too expensive, man. Your premiums are being affected because of this. I think that it's probably best for you to go elsewhere. And that's ultimately why I left Geico. Back to my original point, I was faced with a problem. I was pushed in the direction of insurance. It affected my premiums for 3 years.
Yep. Yeah.
Don't be distracted, and don't admit fault, and allow insurance companies to provide that value.
I think you did. I think you did hit the nail on the head, though. Regardless of the severity of the accident, you're going to want to get a police report, and you're going to want to exchange information, because it can always come back and bite you, you know.
And it bit me.
2-3 months later, she's like, oh, you know, like my neck hurts because I got a little bit of whiplash, and they can come after you.
Yeah. 5 miles per hour, nothing.
Yeah.
And you know, again, and this is a 21-year-old living in DC, first time away from home. And I looked at, and this person ended up being like super high up in the government. The husband did. I don't know what she did, but and I looked him up, like super high up in Department of Homeland Security. And I'm like, really? Like, you're taking advantage of a 21-year-old? And the conversation was this. And I did have a discussion with her at the end of it. I'm gonna go through my process, but you're taking advantage of a young person.
Yeah.
And that's not a conversation for today, because that's gonna happen. Well, maybe that is. Yeah. That's gonna happen. Make sure you have coverage.
Yeah. It's the bottom line. Yeah.
Trust your insurance provider. Trust that they have your best interest. Does it affect your premiums? Does it affect your deductible? Maybe.
Yeah.
But it's protecting you at the end of the day.
And a lot of it too, you know, where at least I come into play as an insurance agent, versus, you know, Progressive Direct, let's say, or the online Geico. You can call me up and be like, hey, you know, this happened. What do I do?
What do I do?
Yeah, just give me a little guidance, because it's you're not calling the insurance company. You're calling an
insurance professional.
Correct.
That can guide you. And then too, you know, it's I think that's such an overlooked question to ask. I think a lot of humans have a problem and they feel like they need to solve it themselves.
Yeah.
No, ask a 50-year-old that's been doing insurance for 30 years. I mean, a 15-year experience. Like, that's who you should be asking.
Yes.
Not trying to diagnose these things yourself. Like, we were dealing with something when it came to a real estate document. And I said, what are we talking about? Send this to an attorney, and it's cost of doing business at the end of the day, but you at least know that the next step is going to be the right step.
Yes.
That's all that matters.
It is all that matters.
And I really want to drive that point home. If you have a problem, if you have a backup, if you have a leaky roof, call an insurance professional and get some guidance. Maybe you get 3 phone calls, and maybe you kind of assess what we should be doing. But I don't think people are asking the right question to enough people.
I think you're right. Yeah. Because, you know, at the end of the day, it's just you get the help when you need it from those who know it best. Yeah.
I've been saying this a lot recently for whatever reason. You don't need to reinvent the wheel. We've been using the wheel for a long, long time. Ask somebody who's been using that wheel for longer than you.
Yeah.
And then they're going to be miles ahead of you, days, weeks, years ahead of you. But they've lived your life. So filing an auto claim, you're not the first person. You won't be the last. You're not a home claim. You're not the first. You're not the last.
Right.
Ask somebody who's been through that process, so you know exactly what you need to be doing.
Yeah.
One thing I wanted to talk about, and this kind of goes hand in hand with a lot of the things that we're talking about, and you can't really protect yourself against this. And I don't know what they are, but I wanted to ask you about them. Homeowner specifically, what's not covered? And not a serious example, but I saw an example like war.
Yeah.
War's not covered.
Nope.
Acts of God.
Yeah.
Hurricanes, tornadoes, in some capacity if you have the endorsements.
Yeah. So
we have a tornado come through Brighton. Is everyone's house covered?
Yeah.
Okay.
Yeah. So that would, because I guess you could chalk it up as high wind.
Okay.
Right. But if you have a flood, like you said, an act of God flood.
Not covered?
If you don't have flood insurance. So for hurricane, flood, those are probably the volcano would be another one. Those are separate insurance policies that you get in addition to your homeowner's insurance policy. So a lot of homes are in flood zones. We have that problem, probably the most common here in Michigan.
No volcanoes, not really tornadoes or hurricanes.
We don't have hurricanes to
flood
worry about.
Insurance does come up.
Yeah, exactly. Or natural fire, I think, is another one.
And hit it home with flood insurance.
Flood insurance is a separate policy. It's required by the lender, and honestly, you're gonna want it if you're in a flood zone anyways. But it is additional to your homeowner's policy, and it can be anywhere from $500 a year to, I've seen them as high as $5,000 a year. So luckily, we're at a stage now where there are other third-party carriers that offer flood insurance. It used to not be that way.
It was just FEMA,
just
correct?
FEMA. You'd have to go through the state, and that was very expensive. Now we have other carriers that offer flood insurance, and what makes it so nice is that those carriers are only operating in states that have lower risk. So if it's our company is called Aon Flood, they're not doing business down in Florida where there's a bunch of hurricanes.
Yeah.
They're not doing a ton of business out in California where there's a bunch of wildfires. So because their risk pool is smaller and they don't have to pay out on hurricane losses and stuff, they're able to offer lower premiums for us here in Michigan. So it makes it a little bit more affordable, which is nice.
We had someone recently on the river, here on river.
Yeah.
Flood insurance required. FEMA was, I think, like $6,000, $5,500, $5,000, whatever it was. Yeah. And then there was an alternative that, who was the person before you? Michelle. Yeah. Michelle was able to offer, and I think that it was, and again, it's different, homeowner insurance, flood insurance, but this provider was able to offer a flood insurance alternative. I'm going to use the word alternative. I don't know if it was actually like apples to apples. Flood insurance alternative for like $2,350 on top of the homeowner's insurance, but it slashed what they were going to pay with the FEMA by 2/3.
Yeah. I mean, alternative is kind of the right word. It's still flood insurance. It's still going to pay out exactly the same way that the FEMA policy would. So there's no difference in the coverage.
And I guess the only thing that not the difference, but the only thing to really dot your I's and cross your T's is replacement coverage or the replacement numbers, the deductibles, the same exact things you're going to be talking about through auto, home, so on and so forth.
Yeah. War.
Probably well, knock on wood, we never have to deal with that. But people like in Ukraine and wherever, they're dealing with that, and that's something that's not covered.
Unfortunately, no. I think if we ever did uncover losses, there'd probably
be the day for America.
Bigger problems. But I would imagine the government would probably have to step in and do some
type of coverage.
Some mitigation. For sure.
Any other things that come to mind for maybe more of a Michigander standpoint for not be covered?
Yeah, actually, I'm glad you brought this one up because there are. Just without trying to make it too confusing, there is most homeowners policies, they are written up, they call them an HO3, which is the classification of the homeowners policy. There is an upgraded version called an HO5, and not all carriers offer them. So a good example of the difference, I should say the main difference between an HO3 and an HO5 is your personal properties, your contents, personal property. It is covered at an open peril risk with an HO5.
Okay.
Meaning, whatever happens.
I thought I had the definitions on here.
Did you?
I saw HO3 and I saw HO5, but I guess I didn't print off that page.
Yeah. So, HO3, don't get me wrong, a lot is still covered under it, but with an HO5, it's just like an upgraded boost, and like no matter what happens to your personal property, it's covered. So here's a good example. Let's say you are on top of a ladder inside your house, painting the walls, painting the whatever, and you got a 2.5 gallon bucket of paint on the ladder, and it falls off and spills everywhere, destroys the wood floor, destroys.
Kind of gives me anxiety.
It did, right?
Yeah.
With an HO3, it might not be covered because it's just an accident that happened, but with an HO5, it would. Yeah. So again, we're circling back. Not all insurance policies are created equal.
Until I read it on the screen, you could have told me HO3, HO5, and I'd be like, "Are you speaking Spanish to me?" and it's funny you bring that up too, because again, they're not all created equal.
Yeah.
Know what you're actually getting. Know the actual coverages. Know what our deductibles, premiums are, and that's the tough part of the thing about real estate is people would always say, "Hey, what's this house worth?" Yeah. Well, that's a longer answer than you actually were looking for,
right?
Because you wanted me to say yes or no, but it's not as easy as yes or no. It's bones, square footage, location, and then the list goes on, and then those conversations go to different conversations. It's no different than insurance. Well, we got an HO3, we got HO5. Well, we got this coverage versus this coverage. Well, we got this carrier versus this carrier. It's a long conversation.
It is, yeah.
But a necessary one.
It is. And sometimes the difference, you'd be so surprised. It's nominal. You know, the difference between an HO3 and an HO5 might only be $30 a year. And it just may not be offered by some other carriers where some do. So, you know, if you're, you know, comparing apples to apples with one quote versus another, you know, whose apples are we really talking about?
Yeah. So. And every single apple is not created equal, though, too.
Exactly. So,
where was I going to go with that? That's why, again, I really want to hit that home. That's why these conversations are so important for people to actually understand. The thing that I get concerned about is that people don't understand the insurance. They don't understand the lenders. And again, like, I don't know everything that you know. I don't know everything that John knows. But at the end of the day, if I know enough to be dangerous, that's all I think that matters. So I'm comprehending these things. I don't know if we can directly correlate to experience in anything, but one thing that comes to mind for me is how many, statistically, there's a stat out there. How many people are driving right now in the state of Michigan that are uninsured with auto?
It's probably a scarier number than you think.
Like 30% would be my guess. That's scary to think about. Not that we think about hurricanes, tornadoes, floods every single day, nor should we. But at the end of the day, those things happen. And if you're not prepared for the worst case scenarios, you're prepared to fail. What's the saying? Fail to prepare, plan to fail. Something like that.
Sounds...
something like that. Plan, prepare for failure. So, well, I'm going to look it up and we're going to put it in there. Point being is, if you're not prepared for the worst case scenario, you're screwed.
And especially, like you said, for uninsured or even underinsured motorists.
Failure to plan to fail.
That's it.
Failure to plan to fail.
That's it.
I knew it would take me a second. That's funny.
But
we talked about a lot of things. I think it's a lot of great information for first-time home buyers, and actually, I think something that anyone can learn about a conversation with insurance. A lot of great applicable things to take home, to talk to your insurance provider, and/or have a conversation with Brian. Worst case scenario is just kind of fun. Well, maybe not fun, but maybe things that you'll never experience, but you should be cognitive of. I think it's a lot of great information. Anything that you want to leave the audience with, though?
Just ask questions. Like I said, we're here to help. We're here to educate. So many times with first-time homebuyers, I'll send out the quote and I'll follow up with them, and then I'll say, if you want to go through it line by line, I'm happy to do that. And you'd be surprised how many people don't take me up on that. And it may only be another, 7-8 minutes. But hey, at least having a base understanding of your policy, so that if and when you do have a loss, you're a little bit better prepared for it. And I always say, hey, just at the end of the day, just call me, text me, pick up the phone if you have any questions. But do a little research, but also do it with your insurance with your insurance provider, your insurance agent. Ask questions, and if you decide to get multiple quotes, which I encourage everyone to do, the benefit of an independent insurance agency is we're going to get you multiple quotes, just Period. As a courtesy. It's just what we do. We shop every carrier we have to make sure that we're going to offer you the best policy that we can. But if you do go to what we call a captive agency, which is like a State Farm, a Farmers, Farm Bureau, Allstate, like they only sell their insurance. They don't partner with any other independent company. If you do get one of those quotes, send it to your independent agent and have them review it. Have them do it on the phone. Put them on the spot. Say, what's the difference between this policy and this one? Because you got to protect yourself. You got to make sure that you're properly insured, and you want to make sure one, you're not overinsured or you're not underinsured.
One thing I want to say is if you have that conversation and the independent insurance individual says, hey, I don't got time for this, don't ever call that guy back. 100%. And I think that's a great metric.
Yeah.
My buddy's got this rule that says ask the same question 3 times. And that's 3 different people. That's to the same person, because sometimes those things change and evolve with new information. But asking that to 3 individuals, and for me, I would always call an independent, purely because I've worked with the directs. What'd you call them?
Captives.
I've worked with the captives.
Yeah.
And every single time that I got the best service, and price, was calling an independent provider.
And the best thing about us is that if and when your rates go up, right? They almost always do. I feel like they do. We have other carriers we can shop you across.
Yeah.
At an absolute courtesy to you, for like, hey, can you take another look at my policy, do a review, make sure I'm still getting the best. When you have your insurance with a captive agency, the only way for them to reduce your rates is to increase your deductibles or cut your coverage.
Yeah. And that's what happened to me. It was the conversation of raising deductible, and you have options. You got to just find those options with the right individuals. At a captive agency, you're most likely not going to have those options unless you're doing those, raising deductibles and lowering coverages. And ultimately, that's what I was guided to do, was raise my deductible and lower my coverages. And again, knock on wood, I never had to have that conversation, for better or worse, but it does open your eyes. And I've been dealing with insurance for a while. You've been dealing with insurance for a lot longer than me as a profession. After an hour of talking, I've even learned things. And I think that's the biggest thing as well is, well, read your documents, have these conversations, take the 7 minutes to really understand these things. Because if you're not taking the time, you're gonna have to learn it at one point or another. It's either you're proactively doing it or you're reactively doing it. I'd rather be proactive on it.
100%.
Well, thanks for coming on, man.
Thank you for having me, man.
I think that no different than lending, insurance is a conversation that we'll have for the rest of our lives. So maybe we'll go on once a quarter and talk about some changes in policies, changes in coverages, because law changes,
everything,
requirements change. So staying up to date on any of those changes is important for consumers. Because we're not getting that. It's not the headlines of Fox, CNN, NBC News.
Right.
So, and things like you said, change in 2020 or 2022, and staying up to date on how it affects you is very important.
Yeah. And even, a lot of times there's industry changes that, you get your insurance documents, you're like, man, my rates are going up. There might be a good reason why they're going up, and it might be across the entire state. So it might not just be you specifically, it's just in the industry. And,
One question.
Yeah.
Why? Why is that? But then to your point of ask that question.
Ask it.
Hey, Brian, why? Great question. This is what's happening. This is what happened from a governmental standpoint, from a legislation standpoint, from a monetary standpoint. This is why all of our premiums are getting affected. And it's not just, and that's again back to the conversations of real estate, lending, insurance. It's not a singular answer. There's a bunch of different factors, but it's all starts with one question. Hey, why? This is what I saw. Why? And you have options. Ask the right questions. Get educated. Stay protected. That should be a damn slogan.
Oh man, t-shirt.
Catch it, man. Thank you.
Thanks for watching. Make sure to use those like, comment, and share buttons below. And don't forget to follow us on Facebook and Instagram, and subscribe to our YouTube channel at Pat Lotz Real Estate for more helpful home buying and selling tips. Want a free comparable market analysis? Scan that QR code on your screen or visit our website at www.patlotz.com and fill out the request form. There's lots to love in Livingston County.